Welcome back to the channel, Crypto Trend Trader, with a quick update on Bitcoin. Before we get started, I'd like to remind you it's not financial advice. I'm not your financial advisor. These markets are extremely volatile, so please do your own research and trade responsibly. Alright, here we got Bitstamp. I'm on the 4 hour, and we're looking at the moving averages. Most important thing to pay attention to right now on the 4 hour time frame is this red moving average, which is our shortest period moving average. The idea being that if we're closing below that we're going to continue downward. So you'll see we're above it, we're finding it as support. Once we get the close below it, we can't get back above it, it's acting as resistance. And then finally we get up here, we find the close at it, we get the close above it, and then after that we sell off and find it as support. And then we're able to actually find it as support for a few of these candles, and then here we are finding it as resistance again. Then we finally get the push above it, and then the big sell-off. And essentially what that is like a stop hunt or an attempt to break it out above that moving average, and then it fails and gets pushed back down. So as long as we're below that, it's going to continue pushing us down to the downside and act as resistance. And again, the most likely target is going to be right here where the 200 exponential and 200 simple now are coming together in the same spot. Now flipping over here and looking at the same indicator, but paying attention now to the red dots and the green dots, that's our parabolic SAR. And you'll see that once the parabolic SAR flipped over right here, when we took it out, it flipped red all the way down here, and then that little push up here took out the parabolic SAR and flipped it green. And a lot of times on these shorter time frames, when you're closer to the parabolic SAR, you get a much more reliable move off of it, as where if you're like real far away from it like this and then you sell down to it, those moves tend to be less reliable. So right now we are flipping back over into the green, but that doesn't mean that we can't come all the way back down here to where the parabolic SAR is. So where we were very close to the red and then we flipped it over, right now we're very far away from the green. So if we were to flip that over, we would need to get like a massive sell-off straight down to it, which a lot of times that's what happens. So you typically want to take trades closer to the SAR than further away from it, because if you took like a long trade now because it's green, the likelihood still is that it could come down here and test this SAR, so you have a massive range. But as where if you took like a short off of this right here, when the parabolic SAR is like red, you know the range where if you found out when it flips over to where you took your short off of is so close, it's much more reliable. Now in this case, you would have potentially gotten stopped out if you were like reckless with your stop loss, but we'll see how it plays out. I still think we're more likely to head back down here. And then also looking at the TJD, TD MACD. I'm sorry. Let's look at the resistance and support first. So we have the purple here also. This is our binary pivots and the blue. And essentially what that does is once you get the price action to touch a certain spot, it puts like a resistance or support in place, and then that will slowly like move as the price action moves. So when we get the wick down here, we put that support in place, which is basically in line with the 200 moving average. So it starts like building basically these green support lines or blue support lines right here, in the same way that we have the resistance in place from back here. When we put in like the high, you see it marks that resistance and it comes across here, and then when we come back up, it starts to come back down, and then here we are right back at that same resistance point again. So you'll see it's basically drawn like a purple line across the top here, and then it's drawn like a blue one on the bottom here, but it moves in the direction of the trend. So the one that holds still is usually like the resistance, and the one that moves towards it is the support, or opposite if it's going in a downtrend. But it essentially helps you to identify the trend and the most likely point to reverse from. And again, that's lining up perfectly with the parabolic SAR down here, where you see all the blue dots in a line, and then you see the green dots lined up perfectly with the 200 moving average. So typically what tends to happen is price action will be drawn towards that like a magnet, and then typically in this situation we'll find support on it when you get that many levels of confluence. Now I don't necessarily think that that's going to be the case here. But now here we are at the TJD, TD MACD. You'll see we do have red on the slope. We're below the slope line, and now we flip the histogram back over to red, which is essentially like us getting rejected by the slope line. The histogram is attempting to get back above it, so the same way that we're trying to get back above the moving averages, but we're failing to do so. And now if we go down here and take a look at this bad boy, you'll see we did get the buy signal on the 4 hour, and then we also have this set to the daily, and you'll see we're starting to curve back down. You basically have your blue came all the way up here and found resistance on the orange and the yellow and got rejected, and now it's getting ready to cross back to the downside in the same way again that we moved up here. And just like I said, we got resistance on the 90 and the 55, or the 89 and the 55. We move all the way up, find resistance exactly at those moving averages, because essentially what the moving average represents is over that period of time whether or not you're getting a deal or you're overpaying. That's how you have to look at it. If you look at a 55 period moving average and you're looking on the daily, you're looking at the last 55 days, and all you're doing is a simple calculation that says, is the price right now below that moving average or above that moving average? And that's what the line is essentially like the average price over that time period. So if you're looking at 55 days, the average price of 55 days is going to be, you know, this green line right here. So if price action is above that, it means that you're probably overpaying if you buy it, because you're buying it for more than the average over the last 55 days. And if you buy it underneath that moving average, you're getting a deal on it because you're buying it for less than the average for the last 55 days. Now, depending on your period moving average is going to give you, and price action of whatever asset you're looking at is going to tell you like the relevance of that moving average, whether you're looking at a good time frame, too short of a time frame, or too long of a time frame. But in this case, the 4 hour is very reliable in cryptocurrency, and often will give you like you know, it'll precede obviously the larger moves, so you can use that as a trigger for longer term plays. So but there you have the moving averages, the TJD, TD, MACD, and this is similar to the regular MACD, but at the same time it's very different. And the settings I use on all my indicators are very different than the stock settings. If you were to just go out and use the same settings I do on regular MACD, I have no clue if it would even be reliable, because I haven't done it in probably a long time, because it's just a worse version of what I already used at work. So and that's what you'll find with all my indicators, and all indicators is it's really not about what information's going into them. It's more about how it's being presented to you, because with all these indicators there's really only so much information, and there's only so many ways that it can be like presented to you, you know, with colors and lines, and you know, whether it draws the stuff up here or draws it down here, you know, in the end it's all the same information. So but it looks like we're just going to be bouncing around here. If we cannot get above our red moving average, you know, it's impossible that we could get back up. And now here, looking at the daily, what's happening now is we're consolidating inside the red and the yellow. And typically what happens when you consolidate inside the red and the yellow is you're typically getting ready for a powerful move in one direction or the other. So being that we're at the support here, that should tell us that we're most likely to get a bounce to the upside and continue to find support on this green parabolic line that we've been finding support on the entire time. But that doesn't necessarily have to be the case. March 12th is when we like found our bottom here on the daily based on candle closes, and we've essentially just been bouncing up and down on this parabolic trend line, just continuing to move up. So there's no reason to think that we're not going to continue to move up on it, you know, this time as well. You know, because the trend really is your friend until the end, and the trend right now is up. But we do have to pay attention now when we look down here on the daily. If you look at the daily and then you look at the weekly, we're now flipping it over to where we essentially are getting the daily flip. So we need to be very careful. Also on the daily here, the price action on the histogram is below the moving average, and the moving average itself is blue, but it's losing its slope. So we're essentially like right here. So what tends to happen is we usually get like an attempted move back up to attempt to get back on an uptrend to flip the slope or continue to keep the slope blue, and then when that fails you'll get like that sell-off. So now if we flip over here, you can see basically right where the blue flipped over and where we're at, this is essentially where we're at. And then we got like a little sell-off, an attempted push back up like I was saying, and then the capitulation dump. So we need to be very careful right here, because essentially what we're doing is we marched up here along this parabolic trend line this whole way up inside this channel essentially, and then we got up here, we're putting in a lower high, and now it looks like we're getting ready for a massive sell-off followed by capitulation dump. So what we're looking for is if this just starts to consolidate here but fails to hold that green trend line, it's more than likely going to essentially test back up here, put in an additional or third lower high, and then we'll get the capitulation sell off. At which point in time we need to pay attention. Do we put in a lower high or a higher high than this point right here? And then finally, if we flip over to the weekly, you'll see, like we were talking about, we essentially ran into a whole cluster of resistances right in this area, the strongest being this yellow here and the red coming down from our $20,000, $14,000, and then our $10,000 tops. So, but if we can get back above this yellow line here and then consolidate above it, I think we'll continue to get marched up, and we'll be on our way to putting in new highs in 2021. But if we fail to do so, I think it's more than likely going to be us coming down here to the median line of the descending cone right here. And then once we touch the median line, which lines up with our green parabolic trend line of like the macro trend on the weekly, which comes in at 66.35 basically. If we get down, and it's also the 0.5 fib as well, if we get down to like anywhere between 6,200 and 6,600, I think 62 to 6,600 is like the ideal point, to find support at the median line of the cone, find support at the parabolic trend line, and also some key fib levels, and then we could potentially get like that move back up here. And I've said this many times, and I do have a lot of subscribers. My channel is not that old, but I am a bull on cryptocurrency. Long term, I definitely believe in cryptocurrency and like the actual technology behind it, blockchain, changing the world, all that stuff. The only problem is obviously that we've been in a consistent downtrend for the last few years, consolidating, or however you want to put it. So don't get it twisted. The fundamentals are stronger than ever as we're devaluing our currency left and right. Everything basically is in place for Bitcoin to succeed from the previous like financial difficulties, recession, money printing, poor policy of the Federal Reserves around the world, global banking, all that stuff, like the transfer of wealth. I mean, everything is set up right now for Bitcoin to succeed. It was literally created, for this exact moment. But the problem is you have to be very careful, because we've talked about it before, that Lindy effect. Things that have existed for long periods of time tend to continue existing for long periods of time. So Bitcoin is 10 years old. It has very few like legitimate data points and none in a recession depression era. And then in the meantime, basically we know what's essentially going to happen with the Federal Reserve and with governments and all that stuff. Like, they're going to essentially like do whatever it takes to maintain power. So you're essentially betting against the system. You're betting that the system is going to fail, which in all likelihood statistically is improbable. So you're basically like picking the trend reversal point. Like the trend is that like the Federal Reserve and money printing and cash and fiat currencies work, and they have been working for thousands of years, and in this case for hundreds of years, but become like actual fiat currency 30, 40 years now. So the likelihood is that it will fail eventually based on records of other fiat currencies in time. But what is the likelihood that this is the exact moment, the inflection point that it fails? It's very unlikely. We're essentially picking the reversal point of a long-term trend. So you could be wrong by a year and get absolutely cleaned out, but in long term it's going to look like you were right. So it's like that old saying, even if you're right, if you're early, you're still wrong. Something like that. But essentially it's saying like you could be right about the stock market crashing and the economy coming crashing down, but if you shorted it a year ago or 5 years ago or 10 years ago, like some of these gold bugs and people saying everything's going to come crashing down, you would have got cleaned out by now or missed out on exponential gains. So make sure you don't get stuck in your own mindset here. You know what I mean? Crypto's in a position where it's powerful and could, essentially explode. But at the same time, like there's a lot of hope and a lot of wish behind that. And more likelihood it's just going to take time. But what is the likelihood that this is the moment? I mean, it sure feels good based on fundamentals, but technically speaking, I think it's more likely that we're going to continue to consolidate, and it's less likely that we do get the breakout, because the breakout only happens one time. This is essentially where we put in the top. We came back up here. Now we have like 2 data points, so we can put in this line here, and then we come back up to it a third time on a clear check. So now we can, count that as a useful data point. And then obviously, like, this one fell a little short, came up here and found resistance at the exact point, came up here, found resistance at the exact point. So now we could break this for sure and get the breakout here, in which case we break, maybe retest, and then get a powerful move up. But the most likely thing to happen is we continue to get rejected until we don't. So until the one time that we do break out, we're going to continue getting rejected. And you'll notice here, when we came all the way down to the bottom of the triangle and the 50% of the cone, we got to move back up to the top and then come to the top, sell back off to the bottom. And now here we are. We come all the way back up, come all the way down to the bottom of the cone, get the move all the way back up to the top, come back down. So now are we going to get the move back down 50% and then find support here in that 62 to 6600 range? I don't know, maybe. I sure hope so. Life would be a lot easier if Bitcoin was just going up all the time instead of going down. So well, there you have it, guys. Long-term and short-term technical analysis. I'm Crypto Trend Trader. Be very careful right here, as it does not look particularly good. And if we are looking for an inflection point to pay attention to, for this to potentially start moving back to the upside, the easiest thing to do is just look at our short-term moving average. In this case, I'm using the 8-period moving average on the 4-hour, but if you want to use the 10 or whatever you prefer, that's fine as well. This is not financial advice. I'm not your financial advisor. These markets are extremely volatile, so please do your own research and trade responsibly. As you can see, the reason I use the 8 is because it works perfectly. The 10 is not going to get the same closes and opens, and people use specific things because they like it and it's most effective, and that's why I use the 8. I don't see anyone else ever using the 8. It's not popular, but it's what most of the algorithms are programmed off of, so it makes a lot more sense essentially to use just a slightly shorter period moving average than the typical person is, because you're going to essentially get like that little bit of a jump start off of all the moves. Now, the risk of that is that you're going to potentially get more fake outs because you're jumping the gun just slightly before the other ones. But again, the bots and algorithms and market makers are what's moving this market, and they're using same things I am. So, Crypto Trend Trader, and I'm out of here.